Good morning, everyone. Welcome to our third and last EUDR Summer School webinar. We're very excited to have you all here today again and to take you through the third part, which is the due diligence statement. Natalia and I have spent quite some time putting together these slides and making it as clear and practical as possible. I think most of you know us by now, but for those that don't, a really brief introduction. I'm Jasper. I'm one of the sustainability researchers here at CoolSet, and I'm joined today by Natalia, who's also one of the sustainability researchers on our team. And together we're working on building our EUDR software, communicating that with our customers, and of course communicating that with everyone attending today as well. So we have a lot of, I think, interesting slides prepared for you today. We're going to dive into the legal background and then, of course, also dive into the more practical elements. For those that haven't worked with any of it yet, we ensure that everyone kind of is taken along in that process because we also, had to start somewhere at some point, and we also understood it is quite complicated at times. So we really try to take you by the hand and explain everything in a very practical manner. A very short housekeeping rule. You can put any questions in the bottom right. For any kind of public chat, you can write it in the bottom right as well. Feel free to use the question function for questions that you may have throughout the webinar. And towards the end of the session, we'll add everything. We'll discuss all the questions during the Q&A. So really looking forward to the session, and please ask away if you have any questions. So to give a brief overview of the past sessions, for those that have already attended, you'll know, but just to give you a bit of an overview, so also that you know what we won't talk about today. The first session was about collecting data for the EUDR, so what you need in terms of geolocation, production dates, but also legality proof, and what makes data adequate and verifiable in line with the EUDR regulation. Then for session 2, we talked about risk assessments under the EUDR, so what are the EUDR expectations on risk assessments and mitigation, and how do you define and justify negligible risk. So this is also a really, really important step of the EUDR to ensure that every product that you put onto the EU market is deforestation free, for example, and also has kind of looked at all of the risks associated with EUDR. And then today we're talking about submitting your due diligence statements. So who needs to submit one? What does it include? And navigating the Traces platform. For those that haven't heard of it before, it's basically the EU platform where you upload that DDS, and DDS you'll see that throughout this webinar means, of course, due diligence statement. So let's have a look at the plan for today. We'll start with seeing where the due diligence statement fits in the compliance journey, who files a due diligence statement and what does it contain. Then we'll navigate the exemptions and the simplifications. Then we'll give you a really kind of detailed breakdown of the Traces walkthrough, just so that you really understand, okay, well, this is all nice to know the technical details, but what do we actually need to do once, push comes to shove. Then we'll go over the real world scenarios, and then we'll summarize EUDR. And then we also have a little surprise at the end, so stick around. And then, of course, we have the Q&A. So what is the due diligence? Where does the due diligence statement fit in the compliance journey? So what are the basic elements of the EUDR? So you have Article 3, which I think is kind of the overarching article within EUDR that I want to quickly kick off with. And I'll just quickly read it out here so that you also have kind of the legal foundation before we get into the more practical steps. So Article 3 states that relevant commodities and relevant products shall not be placed or made available on the market or exported unless all of the following conditions are fulfilled. They are deforestation free, they have been produced in accordance with the relevant legislation of the country of production, and they're covered by a due diligence statement, which is the bottom section here. And that's also, of course, the topic of today. And I think that really brings everything together. So the due diligence statement is basically your stamp of approval for the European Union that everything that you've done in the previous steps, such as certifying that it's deforestation free, then that is produced in accordance with the national laws, is fulfilled. So let's move on to the next stage. So what is a due diligence statement and where does it fit in the process? So this is also, I think, kind of the theoretical foundation. So the EUDR has a 3-stage due diligence process, which consists of data collection, risk assessment, and mitigation, which we covered in previous sessions. Once the due diligence is completed, a risk is judged negligible, which is not a kind of, it's not something that automatically happens, but once that is the case, the operator submits a due diligence statement, a formal confirmation that due diligence was done and that the product is compliant. It certifies that the steps have been fulfilled and that the product is deforestation free and legal. So essentially, when you put your product on the market within the European Union, you accompany it with a due diligence statement that is kind of a certification that, yes, I have kind of gone through the steps of the regulation and I have certified that what we're selling today is compliant with the EUDR. So then a quick poll question that I want to kick off with here. Do you know if you have to submit a due diligence statement for your orders? Let me quickly launch it. There are three options here. Yes, I understand my responsibilities. I am still unsure. I do not have to submit a due diligence statement. I think that one's mainly relevant for the companies that perhaps are attending but don't have to report on EUDR directly. Let's see what people are saying. Oh, interesting. Over 50% are saying, yes, I understand my responsibilities. Okay, that's a really good sign. I think that means that we're getting to kind of more clarity on the EUDR. When I compare that with kind of the poll answers from our previous webinars on EUDR, there was a lot more uncertainty. Most of the people responding were quite unsure. I hope that the certainty comes from our previous sessions and that gives you the confidence to say, yes, I understand my responsibilities. Of course, there could be many other reasons, but good to see that there is more certainty. The number now sits at around 55% of you saying that you understand your responsibilities. So that's really good to see. Moving on. So let's see who files a due diligence statement and what does it contain. So here we have a slide kind of breaking it down by the non-SMEs and the SMEs, and essentially, in a nutshell, the non-SMEs are companies with more than 250 employees. So let's see first for the non-SMEs, if you are a first-line operator, which means that you're either the producer of a product or the first one to import it onto the EU market, you need to provide a full due diligence submission with full evidence collection. So you need to kind of go through the whole shebang and you need to do everything in line with the regulation. Then you also have the downstream operator, which is basically a company that then buys from the first line operator or kind of is the next in line in that supply chain. So here you also provide a due diligence statement, but you only provide the upstream due diligence statement as evidence, and that's the same for the trader. So the trader is someone that, for example, doesn't produce or have anything directly to do with the product, but only essentially trades it within or on the EU market. Then for SMEs, it gets a bit more interesting because here we see that the first line operators also have to provide a full due diligence submission statement, including the full evidence collection. But then for downstream operators and traders, there's no due diligence statement required at all. So that's also something that's quite interesting to know. And if you have more questions about that, whether your company falls under that and whether the kind of conditions are satisfied, feel free to reach out to us. We've also mentioned it in the first EUDR webinar that we had, so you can also rewatch that for more context. So I think this slide, we added it because, in the conversations that Elizabeth and I have had over the last couple of months, there have been moments where we both thought, oh, but isn't this then the case or is that the case? And we just wanted to kind of highlight some misconceptions here and move them out of the way. First misconception is that the EU country benchmarking influences due diligence statement responsibilities. It does not. So we have also talked about kind of this benchmarking system by the European Union that states that some countries are high risk, some are medium risk, some are low risk. Whether you kind of import or buy from those countries, the risk level doesn't matter for you. You still have to produce a due diligence statement regardless. Second misconception is that the market role equals the EUDR role. It does not. So in a market role, perhaps you might be a trader of some products, but then when it comes to EUDR, that means that you could be also an operator based on kind of your role, or you're first in line based on your kind of role in the market. So don't automatically assume that just because you're a trader in the market, you're also automatically a trader under the EUDR. Third misconception is that a supplier's due diligence statement ensures compliance. No, it does not. Buyers must still verify and ensure compliance. So even if you're a downstream operator or a trader, you can use the due diligence statement of the first line operator, but that doesn't mean that you can just take it for granted. You still need to do your own kind of risk assessment and critical judgment of that due diligence statement. And then the fourth misconception is that the EUDR only applies to imports into the EU. No, it also applies to products produced and traded within the EU. So say, for example, you're a German timber producer and you're selling to Poland. That also means that that German timber producer and as well as the Polish importer or the purchaser have to work with those due diligence statements. So moving on to the next slide, what does a due diligence statement include? So here we kind of go through the theoretical foundation, and then later on, Elizabeth will take you through the very practical elements of what Traces actually requires as part of the due diligence statement. So based on Annex 2, which is in EUDR, you need to provide basic company identification, such as the name, the address, the EORI, the VAT, and the country, of course. You also need to provide a product description as well as a quantity, which includes the HS code, the trade name, the scientific name, and the quantity. Here with scientific name, we put an asterisk because this only applies for timber products. So if you have a timber product, you also need to provide the scientific name there. Then you also need to provide the origin, so that includes the country of production, the geographic coordinates of all plots of land where the commodity was produced. And then for prior, you can also work with a prior DDS if referencing upstream due diligence. So if you're a downstream operator or a trader. So how do you provide negligible risk in the due diligence statement? So you start with supporting evidence, which stays supporting evidence stays off the statement. So this is also something that I find really interesting. Essentially, you do not upload proof documents into the due diligence statement. All the heavy work happens before submission during the due diligence process itself. So the due diligence statement is quite a concise document that essentially is just a stamp of confirmation that, yes, we have gone through all the necessary steps. Therefore, the due diligence statement is a declaration and not a dossier. So with the due diligence statement, you declare that the product is compliant automatically. So you upload the DDS to the Traces platform and therefore also mention that you are compliant. How then do you mention, or how do you kind of see whether something is non-compliant? That can be identified through deforestation alerts, which come through satellite mapping, third-party reports, random authority checks, or self-discovery of errors. So in these cases, you then mention that to the relevant authorities, or you change your due diligence statement after the fact. Now let's have a look at navigating simplifications and exemptions. So why are there simplifications and exemptions? So first of all, they reduce unnecessary burden and encourage efficiency, because simplifications cut down on repeated data entry without compromising traceability. I think this is quite a useful feature to have, as the EUDR can be complicated at times. So having these simplifications are quite useful. They're also further clarified in the Commission guidance and the FAQs. So we see that the EU issues interpretive documents to explain how to apply these provisions in practice. And we see here, for example, one FAQ questions, which is FAQ 5.19, which says, how often should due diligence statements be submitted in the information system? And can they cover multiple shipments/batches? What about the situations where relevant products may be placed on the market over a period of time? So that is one of the questions, and the answer to that question we explain in a bit more detail in the following slides. So what is a consolidated DDS? That's one of the options that you can have as a simplified due diligence statement. I'll go through two examples of simplified due diligence statements, and then I'll mention one exception here. So first of all, what is a consolidated DDS? A single DDS covers multiple shipments or a broader time frame / volume of product. So basically, this allows you to take several batches or shipments and provide one DDS that covers all of them. What you need to have here in terms of criteria is, of course, the timing. So the consolidated DDS must be submitted before selling any products. The scope must ensure that all products have a risk assessment showing negligible risk. The harvest date must basically prove that all commodities must be already produced, which does include the final product. So, for example, if you're working with timber, you don't need to have the chair already produced by the time you get to the due diligence statement. And the quantity means that all quantity must be declared and monitored. So this is really important for companies, for example, importing, for example, cocoa from different plots of land or different types of over different time periods. You may a DDS if you can certify exactly which plots of land used. Can also ensure that the scope of the risk assessment is included and that kind of all the steps are taken over and over again. But also note that if anything changes, if you suddenly use a different plot of land, if the risk assessment shows new risks, then you have to kind of break it open and provide either a different due diligence statement or you have to do the consolidated DDS again. Moving on to the second simplification option, which is a declaration in excess. This is basically a possibility when declaring more production sites or geolocations in your DDS than the amount of product would strictly require, which is, for example, relevant for coffee or cocoa. This is relevant because when you're buying products, it's not always very clear which plot of land exactly was being used. For example, when importing coffee, so you might have a lot of coffee plots in the country, but you don't know exactly which one you use. So then you say, well, we might have used any of these 5 plots for the coffee that we're purchasing. So we're just going to mention these 5 plots, and one of them definitely includes the coffee that we've purchased. The criteria here is that plots need to be known and verified. So each plot has full geolocation data and has been confirmed deforestation-free and legal. This also means that no mixing with unknown origins or non-compliant plots is allowed. Then also mixing after compliance is required. So that means if you have already ensured that the bulk commodity is entirely compliant before it enters the shared storage or the processing point. And then last but not least, you have the actual plots. The scope should be limited to a potential set of plots where at least one of them is the actual plot. So what do these simplifications have in common? Overall, there is a higher overall business risk associated with it because it's slightly more, you have less of an overview of what exactly happens. Secondly, there's for the consolidated due diligence statement, there's an increased need for operational monitoring. And for the declaration in excess, there's non-compliance, means that non-compliance of one plot can lead to a whole shipment being blocked, even if it is the case that you didn't directly use that plot, but if you include it in that declaration in excess form, you will need to redo your DDS. So moving on to the next point, which is more of an exemption than a simplification. But here, for example, items made of several components, some of which are EUDR relevant commodities, such as a wooden chair, which includes oak wood, but also teak wood, may then be kind of streamlined, and you can only focus on one of the EUDR commodities within that product. So how does the due diligence work in this case? If you have a mix of different commodities, you only do due diligence on the main relevant commodity listed for that HS code. That means that if multiple sources of the same commodity are applied, you must do due diligence for all of them, which means that you need to trace and assess sources separately, and you can do one DDS, one HS code, but also multiple sources. And that was more the technical aspect of this session. And now I'll give the word to Elizabeth, who will take you through a really practical rundown of what EUDR means in practice.
Nice. Thank you very much, Jasper. So now that we saw the technical, we're going to see how we're importing all this information online. And one note here is that we're going to go through the very manual process, but many softwares like Coolset, for example, make it so that you never have to enter traces, which is a good thing. But for now, let's see how the process looks like. So here you can see how the intro page looks like, and on the top right you have the actual website that you can enter in order to start your process on traces. However, you will see here that we also have a replicated environment where you can safely work throughout these last months in order for you to train and submit due diligence statements without having to care about submitting due diligence statements to an actual environment. So let's go through the steps in order to register your company or to find your company. So if you click the link that I talked about, you're going to first have the possibility to either log in or create an account. Creating an account is just a very that we see on the screen, like a basic registration flow. And when it gets more interesting is after you have created your account, where you're being asked to select what is your role essentially. Here, everybody should click operator because all the other options are just for authorities and other bodies like customs bodies and everything. So yeah, you click operator and then you have two options from here. Either you find your company and you connect with your company, or you start by adding the company details from scratch. Now in the first screen here, we see that I have already searched for Coolset, for example, and I can see the name Coolset appearing here on the screen, meaning that I can just select it and ask to join this workspace. Now, in case I don't find my company, this means that it has not been created yet. So on the top right, you can start like create a new operator button, and then this will direct you to a new page where you start adding all the information. As we saw in the beginning, like the basic company information will be added here, so you don't have to re-add them every time. So this means your details, your VAT, and etc. So this is how the process looks like. And before we move on how we submit the due diligence statement, I would like to get your ideas on how familiar you are with traces. So have you registered your company and maybe have already submitted the due diligence statement in the test environment? Have you maybe started the setup but never have submitted due diligence statement yet? Or maybe you have never interacted with traces yet. So let's launch the poll. Just a sec. Yeah. So interested to hear your results. Okay, so most of the people have never interacted with traces, which makes total sense. But it is definitely interesting to go into this mock environment, open it. Even if you're planning on using a software, I think it's nice to interact with it and understand how this looks like. And then we see a good 24% of people that have started a little bit, and then 8 of our participants have submitted ever a due diligence statement. So that's nice to see. Yeah, like the people that have never interacted is now to 60%, which makes total sense, of course. I will move on now on how we can create an actual due diligence statement now. So here we see the overview environment that I can see when I log in. In order to access the EUDR part, you have to go on the top left, documents, and then click on EU deforestation. When you do this, you're getting directed into an overview of all due diligence statements that you have. And we can see the overview, but for now I'm going to focus on how we create a new one. So on the top right, we see that we have a create button. Regardless of if you are an operator or a trader for now, you have to click the as operator one, as we miss here the trader. But yeah, all the other ones are not relevant for you because it's if you're representing another company. So we're clicking on create as operator, and then the first thing we see here is an internal reference number being asked. This is an optional step, but what you can do here, which is very smart, is that you can insert your internal reference numbers. Maybe this is the order number, and then you can always relate this number with the due diligence statements that you get. So you decide if you want it or not, and then you click confirm or cancel accordingly. Now we're ready to move on to provide information about the activity that we're going to declare for. So we see here that we have 3 possibilities: import, export, and domestic. In the import, we have to also say where is the activity and where the country of entry is going to be. If we're doing an export, we only have to say from which country we're going to exit the materials from. And lastly, if we're doing a domestic, we're just saying the country of activity inside the EU. Also, before I move on, we can see here that we already have pre-filled information of the operator or trader name and the rest of information because it takes it automatically from the company information. Now we are ready to move on to add our commodity information. So in the commodities section, we have add commodity or product on the bottom left of the screen. And if we click on it, we can get an overview of all HS codes and product names. You can search there either by the HS codes or a name. I just searched Coco in the screen here, and then you can select the HS codes that make sense for you, that are the ones that you're going to declare. Once you're ready, you click done. And what this does is that it adds up some new pages, 1 page per product. Here I have a couple of things I want to show you around because this looks like a little bit of a complicated section. And the first thing I want to show you is that for every product you added from that list, you first have to say a description about the product and then the quantity in kilograms of this product. Also, we have the scientific name and common name that Jasper talked about, which are available for all commodities, but are mandatory if the commodity is wood. And then one interesting thing here is that sometimes you might need alternative units in order to showcase perfectly your materials, like for example, for wood, cubic meters is a very common unit, so it allows you this possibility as well. Now, the next step is to start adding the producer information and the geolocations. We see here that for every single product we added, we have a section add production place, and these you can add as many as you want. The first thing we have to note here is that we have the possibility on the right to either draw plots and points or upload GeoJSON. I want to mention on this point that if you're the one that submits, drawing the plots and points might be very tricky if you're not the producer yourself. So I guess most of the people will go for the upload GeoJSON files. Then, after I have done the process of uploading the GeoJSON file, which I can also import or export again, I see that I still need to fill some more information. I need to put a name on the producer, which is not a mandatory field, so maybe it's also a description for you if you don't wish to disclose the name. Then you have the country of production, and then we see an overview of all the plots. So in this case, I added 2 plots. I gave them also a description name, so plot 1 and 2. And then I also can see what was the hectares, the total hectares that I drew on the map. This happens for every product you added in the DDS. Now, this reaches the end of the due diligence statement, and there we have some options. We either can save as a draft and come back to it, which does nothing, like it doesn't submit, you just have your preparation work there. Then you can either submit or delete if for some reason you did a mistake. Now, for the purpose of the demo, I'm clicking submit, and then here is where I get the final pledge that I am doing the right work, which means that by submitting this due diligence statement, you are ensuring that you carried out due diligence and that there is negligible risk. Essentially, this is the same as you clicking confirm and signing your income declaration of the year. So it's a binding action, even though it's just through a laptop and you don't actually sign. So you click confirm and sign, and then now it takes me back to the dashboard where I can see a new due diligence statement being created. In the dashboard, we can see the reference number on the left, then also the internal numbers we give, but also we have statuses. And the status at the beginning is submitted, but then it becomes available for you. Now, if I click on this due diligence statement number, I can see an overview of all the information I provided. And on the bottom right, I have the possibility to amend or withdraw. So you can amend everything for 72 hours, and then it becomes final, or you can withdraw if you notice that something is wrong. Lastly, we see a generate PDF, which is an interesting function, but the actual document is really a very basic document that just says very basic information about the product itself, and it doesn't inform about the actual production places, but still it's available for anyone that might need it. So that's the process of going through the due diligence statement. So now I would like to ask your opinion on how feasible you think it is to handle the submission of due diligence statements. And then the options now are manual submission seems impossible because of order volume or employee capacity. Maybe manual submission seems feasible for you, or you might not be sure yet. So yeah, of course, for many people, you're still not sure because you have not interacted, or you're still not have started with reporting yet. And then we see kind of an equal distribution between people thinking it's feasible and people thinking that it's not going to be feasible. But I think this depends a lot on your case of how your supply chain is built and how your order base is built. So of course we expect to see a lot of different responses here. So thank you very much for your answers on this. And now we're gonna move on to some logistics when it comes to submitting due diligence statements. So when do we have to submit the due diligence statements first? So when we're importing or exporting, it is crucial to have this number before reaching the customs clearance. Well, if you are doing an intra-EU move, you have to have the due diligence statement before moving the materials to your customer's facility. One tip from our side is that we suggest you do it even before the moving of the goods starts, because if something happens midway, you're going to have to pay extra logistic costs, have delays, which many times might be for nothing if it's just a regular control, for example. And how do we use due diligence statements in practice now? For importing and exporting, it is crucial to have them because they're going to be part of your customs clearance. So customs officials will check that the valid reference is provided and that it matches the EU database. While for intra-EU, most probably you're going to be asked by your downstream buyers who might request this number as part of their compliance due diligence. One tip from our side on this is to add the due diligence statement numbers in your commercial documents, and then you avoid all these questions about new requests for due diligence statements. Now, some practical information is that after 72 hours of the submission, you cannot change anything in the due diligence statement. So take this into consideration that this is a final after this amount of time. And then you need to be very careful and monitor the quantities of your due diligence statements. Because when you have declared the full, or you have used the full quantity that you have declared, you must create a new due diligence statement. This could be a one-to-one, like every order of yours has a due diligence statement, but if you choose to do the consolidated due diligence statement, you need to be even more careful to track so that you don't overlap, for example, products with two due diligence statements or the other way around. And lastly, if you see any mistakes, either because you found them or a customer of yours found them, the correct approach is to just withdraw the due diligence statement and replace it with a new one with the correct information. Now that we have seen all the information needed for a due diligence statement, we have for you some real-world scenarios when we would like to make this a bit of a more interactive session. And we're going to give you the scenarios, and you can give us your opinion on if you think these operators and traders acted in the right or wrong way. So in the first example, we have an operator is exporting a bulk shipment of soybeans sourced from 20 farms, from a cooperative of 20 farms. The soy is mixed in a single silo, and in the due diligence statement for this shipment, the operator includes geolocation polygons for all 20 farm plots, even though only 10 of those farms actually contributed to the specific shipment. Did the operator did right by doing this? I will leave some time for you to respond. Okay, so the majority of people are getting it right because indeed this is right. So as we said before, this is a clear use of a declaration in excess, where many times it's impossible to know the actual farm, but you might know a section of farms. So in this case, feel free to use this, but be very careful on the risks that if one gets flagged for deforestation, the whole shipment is blocked, for example. And also make sure that if you can find the one-to-one relationship, choose the one-to-one relationship because it's more closer to the actual regulation. Now, the second scenario we have now is a European of coffee plans to import 10 shipments from the same group of farms in Colombia over the next year. Instead of submitting 10 separate shipments, they submit a single DDS in January, covering all 10 shipments, listing all the farms and the total volume produced and not produced yet. They use that one DDS reference for every shipment's custom clearance throughout the year. Is this now right or wrong? Nice. So I see that you're already starting submitting your answers, and 60% of the people think it's wrong, while 40% think it's right. And this is a tricky one because this is a use of consolidated DDS. However, it is wrong. And what makes it wrong in this case is that they they mention clearly that not all the volume is of the commodity is produced yet. So this is something that is very important, and you should be careful. It's okay to do consolidated, yes, but all the materials need to be ready. I'm going to move on now to the last scenario that we have, which is a large EU wholesaler buys palm oil from an importer. The importer provided a DDS reference number for the palm oil shipment they brought in. The wholesaler then sells it in smaller batches to various food manufacturers. The wholesaler does not submit any new due diligence statements for these sales since the product has already had a DDS from the importer, so no further action is needed from their part. Do you think this is right or wrong? Nice. So our answers coming in, we have 65% around of the people think that this is wrong, while 30% think it's right. So essentially, the right answer is that this is wrong because we say that this is a large EU wholesaler, meaning that non-SMEs have still the responsibility to do due diligence statements, even if you are not changing the product and you're just moving it from one customer, from your supplier to your customer. And you still have to submit a due diligence statement. You just have to reference upstream due diligence statements instead of doing the whole process from data collection to risk mitigation. Now, thank you very much for participating on this, and I hope it was helpful. But now we're just gonna move on to a final recap of EUDR. So we're gonna do EUDR in a nutshell. If we had to gather in 4 steps the whole EUDR process, that would be it. So at the first step, we have the mapping of all products in the supply chain. So you identify all products and commodities, you understand your supply chain and all the origins and plots. In the second step, you gather all the necessary information, geolocation coordinates, production dates, supplier details, documents, legality, everything that we talked on the first webinar. Then you assess all your suppliers and plots and orders against the deforestation, legality risk, business practices, and more. And then you define mitigation measures for every case that you identify non-negligible risk. And after you have ensured negligible risk, you submit the due diligence statements before selling the products, as we learned today. And of course, you repeat this process over and over again for all your new orders. And of course, we said that some things might be static. So for example, some of the data you collect might not change every time. So you might be able to skip some steps here and there while you repeat the process over and over again. Now, before we leave you, I would like to give a short recap of how at Coolset we are trying to reduce this complexity of EUDR and all the steps that we talked throughout these 3 sessions. So we have identified 5 steps to success, and the first one starts with supply chain traceability. So through our app, you're able to trace all your orders back to the farm. We do this by first migrating all your information into our app in terms of all your purchase orders and sales orders, and then you're tracing each order to your purchase materials, to your suppliers, and they to their suppliers, and it goes on. This triggers data requests, and this then triggers for you to receive back all the data that you have requested. And we provide standardized questionnaires with all the information that you need from the producers and suppliers. This could include from the geospatial data to legality document to business practices and more. Then as a second step, considering that we have done all the traceability and data collection, we're moving on to the risk assessment where we provide, and every time the data is all there, we move on to an automatic risk assessment that is holistic and comprehensive and includes every section that is mentioned inside the EUDR document. So we don't focus only on deforestation and legality, but we include things like indigenous people, human rights, labor rights, and more. This adds up to around 120 indicators. And we also offer on the side for every document your suppliers provide, we have a document verification that we do through AI so you can get more insights on the legitimacy of the documents you get from your suppliers. And then, of course, there will be risks arising, so you can mitigate these risks through the app because we provide a first line of response questionnaires that are particular to each of the KPIs that flagged your risks. Then, when you have made sure everything is right, we auto-generate and auto-post the due diligence statements to traces, so you don't have to do anything of the things that we just saw today, and you get just back all the information, which you can see on an overview. And lastly, we keep the digital archive for 5 years, but we also have a full-on audit trail, so you can see everything that happened for each of your orders. And we can also invite the auditors into the platform, so you don't have to have messy exports and folders and things that you have to find manually. And that's about how we approach this in Coolset. So now what I want to mention to you is that now we're running a design partnership program where we're onboarding companies that are interested in our product with some specific perks like early access to the Coolset platform. So you get all the features we create first. And we offer also a discounted price for our design partner members. And of course, you get the benefits from a very hands-on experience with us while we co-develop. And what we ask from your end is that you provide us feedback on the platform and everything we share with you. You give us your inputs on how we make them better and more applicable to your case. And then also Jasper mentioned, I forgot that we have here a poll for you, and maybe you can let us know if you're interested in becoming a partner. Of course, feel free to add this. No one sees this information apart from you, and if you're interested, we're gonna contact you, and we can see how we can co-create some of the parts of our product together. Nice. As you put your votes in, I will continue to the next slide because we're almost out of time. And yeah, like our little gift for you, our little surprise is that we have created this summer school certificate for you. So everybody that followed the 3 sessions will automatically get in their inbox a nice certificate from us, proving that you have followed this session and you have upskilled yourself on a EUDR. And if you are seeing this on a rewatch and not in the live session, please email us at eudr@coolset.com, and we're gonna still send you the certificate even if you just rewatch. Hope you find this interesting. And yeah, I think that's the last part of our presentation, and I will give the floor back to you, Jasper.
Thanks, Elizabeth. Yeah, a lot of information to digest. I hope that you also found it as practical as I found it. So we usually try to end the webinars around 11:45. I mean, those that have been around know that we never really make that, so we always go a bit over time. For right now, I think we're gonna spend some more minutes going over the questions. Of course, if you have to jump out, feel free to jump out and perhaps watch the recording later where we go through the Q&A. I already had a look at the questions, and I can say with certainty we're not going to be able to answer all of them because they are, they're really extensive. They're really good questions. And what I would recommend, to also democratize the process a bit to ensure that the most important questions get answered. You can also upvote questions. So have a look yourself at the questions that have been asked and upvote those that you think that you also want an answer to. And then we'll try to go through the ones that have the most upvotes. Quick question here from Delphine. how can I rewatch the previous webinars? If you have already registered for those, you should have got an email in your inbox with a rewatch link. If you haven't registered, you can go to the Coolsa website and find our recordings there, and then you can have a look at the previous webinar sessions. Now let's have a look. I have a question here with 3 upvotes. For intra-EU goods shipments, if an EU supplier provides us with multiple DDS by batches, is that the exporter's or importer's responsibility to submit due diligence statements on traces per shipment? I think that's a good question for you.
Yeah, for sure. So you are mentioning that the EU supplier provided you with the DDS, and then I guess you're the next in line after the EU supplier. So essentially, they have done their part, and then in your case, if you are a non-SME operator or trader, you have then your own responsibility to submit your own due diligence statement. And how you will do this by referencing the DDSs that you got from your EU supplier. If you were exporting and then you're considered operator, again, you do the same process. You reference the DDSs, but every actor in the chain has their own responsibility of submitting a due diligence statement.
Perfect, thanks. Also, if you move one more slide, then we can also you'll see our email address, which also allows you to kind of ask follow-up questions. Also join the EUDR waitlist here. In the meantime, let's answer some more questions. Question here from Jan. Hi, just to double check, as a supplier located in the Far East supplying customers with printed materials in the EU, do we need to create a due diligence statement, or is this the responsibility of the purchaser/buyer, with us only providing the necessary details for them to upload into the system?
Yes. If your company has no presence in the EU, then your first EU buyer is the one that has to do the due diligence statement. However, as you very correctly mentioned, you are the one that will be able to provide them with all the information they need in order to do so. So it's a little bit of a collaboration, but it's their final responsibility.
Great. I hope that answers it, Jan. Let me look a bit and see if there's... Oh, look at this question with 5 upvotes from Luan. Will a trader not need to provide the geolocation, and how will the trader link to an operator's due diligence statement?
Yes, so a trader essentially for EUDR is someone that makes available materials that are already placed in the EU market. And this essentially means that there has been at least one person that has conducted the DDS, that has submitted a DDS before you, and that's why you don't have to provide the geolocations. In the Traces platform, there is another section. If you don't take the full process that I showed you, there is another area where you save these due diligence statement numbers that you found from your suppliers, and then you attach these statements, and on the end, you either see the full page that I showed, or in the next page it says reference due diligence statements. So then you can see all the ones you reference. But it's very similar to what I showed you, but you just fill due diligence statements.
Perfect. And a question here from Jocelyn, also 6 upvotes. If a company orders a sample of an in-scope product, is this still in scope for EUDR, even though it isn't sold?
Yeah, there is a very nice FAQ question for this, which I would urge you to go and read so that you get the actual information. But the general idea is that if a sample is not going to be used commercially, so it's not going to be sold in the end as a product, you don't put it in scope because it's a negligible material essentially. But I would just go to the FAQ and check. There is a very clear question on this.
Then here a question from Beatrice. For a European group with factories and suppliers in various countries, do we register as one business, corporate with several employees, able to access the login in Traces?
Yes, so when we did the registration flow, we saw that every company needs to put their own VAT number and EUDR number and everything. So the question on if you are going to do one or more depends on how your internal structure is formed. So if every factory is legally a company on its own with distinct documents and numbers, then you have to do multiple. If you just have one, then you do one. And about the employee access, you can register to multiple companies. You don't need to be registered only in one. So in that case, the same employees can access from the different factories.
Great. We're going to answer two more questions, and I see two questions with 7 upvotes, so I think we have 2 winners here. Also, just a really quick reminder, we're going to go through all of the questions after this session as well, and to those that we haven't answered in this webinar, we'll make sure that we get back to you over email with an answer to your question. So yeah, rest assured that you will have an answer from us. And once again, a reminder for those that do want the certificate, but haven't attended all 3 sessions live, but perhaps have rewatched one session, feel free to send an email to eudr@coolstart.com, and we'll happily share the certificate with your name on it, so that you can also use that internally or externally to show that you've upskilled yourself on EUDR. So the question here that I want to share is from Aryan. The due diligence statement asks for net mass in kilograms, not quantity. For the weight to specify on the due diligence statement, is that of the total product or only of the relevant material? We sell furniture products for which only a small part is wood.
Yeah, so essentially the net mass, as what we call quantity, is of the product with the HS code that you're declaring. So if you're declaring an HS code of furniture, you have to declare the net mass of the furniture in total, and not just of the wood. Just of the wood, it would be from your supplier that does the logs, for example.
I hope that clarifies it, Aryan. Then one last question from Lee, also 7 upvotes. If geolocations cannot be obtained, can a due diligence statement be submitted?
No, essentially this is the one case that really you cannot move on with submitting a due diligence statement, because you are not in compliance with the Article 3 that Jasper said in the beginning, which says that you need to be deforestation free, and if you don't have the geolocation, you cannot know if you're deforestation free.
Perfect. Well, that's all of the questions that we can answer today. Once again, we'll get back to those that we haven't answered over email. Yeah, if you want to know more, feel free to reach out to us or to eudr@coolstart.com or scan the QR code. We're very happy to help you, as also we are still expanding our knowledge on this. So yeah, thanks everyone for attending the EUDR Summer School. We really enjoyed these last 3 sessions with you, and hope you also learned. We definitely did along the way, and of course we'll keep doing so as we go forward with our EUDR module. So thanks for attending, everyone, and we hope to see you in our next webinars. Bye bye.